Good afternoon, everyone. Today is November 11th, 2011, and this is Brian Shannon speaking from AlphaTrends.net. This market really continues to hold up well. This week, let's take a look at the final numbers here. We did get back into the positive territory today for the S&P 500 with this 1.8% gain. And of course, the NASDAQ has already been there for a bit. It's up 6.2% for the year. But even the financials, month to date, they weren't horrible, but they were down a little bit this week. We'll take a look at all those here on the charts, but let's take a look first at this SPY. Of course, we broke past that 123 level, 123.10-ish, here just about 2-3 weeks ago, and we've been kind of battling with that level along with some important moving averages, first the 10, then the 20-day moving average, but we're holding above that, so the prior resistance is holding as support right now, and we do have this key level at near 123 that we bounced away from once again today. So things were looking maybe a little bit questionable. Let's take a look at a 65-minute time frame. So this is for the last how many days? We've got on here 50 days, and on these 50 days, we can see that this has been an important trend line, and we bounced away from it once again. So if we drill down to the 30-minute time frame, we can draw that once more, and here's what it looks like. So yesterday we closed just above that, but below a declining 5-day moving average. I'd mentioned to subscribers that I thought it was likely we were going to come down and probably break through that 123, but we wanted to be aware that if the market gapped up and held on like it did today, that is, hold on above that volume weighted average price, we had this nice little pullback and then thrust higher a couple times, that we could be setting the stage for a test of these highs from the last couple of weeks. So the market continues to surprise a little bit here. It is Veterans Day, so happy Veterans Day, and that, of course, did impact trading volume, which was pretty light with the bond market close. That's typically a light trading session for equities. But you have to be impressed the way the market continues to hold up here. Looking at the weekly chart, you can see we're still kind of indecisive, and the big talk this week is that we continue to battle this 200-day moving average. This is the 200-day moving average. Now, we've closed above it on 3 occasions here over the last several weeks, but we've come back down each time. Now, the bullishly, we see this higher low at what is that blue or 100-day moving average. So we see that this market is acting constructively. Once again, we had strong breadth. That is, we had 2,596 advancing stocks and just 422 decliners. So I think the key next week will be that we continue to hold above 123. If we can do that, then we still have to give the benefit of the doubt in the intermediate term to the buyers here, and hopefully we can see that we continue to poke away at that 200-day moving average, hold above it, and keep above. That is, close above and hold above it to set the stage for possibly a nice year-end push, maybe even up towards 135 or so. The Nasdaq is obviously holding up much better. It continues to be just a few percentage points away from what are really decade highs here. Obviously, it's the year highs that we've been up towards that level a couple times near the 59 level. But when we take a look at that monthly chart, of course, that's a decade or so high. It's choppy though. It's not easy by any means. You look at the 1.8% gain we had today, and that looks appealing and attractive, and it's obviously good. But we've essentially gone nowhere for the last several weeks. But we've seen a tremendous amount of volatility in here. What we continue to see, though, is through this volatility that this 56 level is really the key area of support for this market. That's where we see right now that green, which is 150-day, and the black is the 200-day moving average. So we've been closing above this 200-day moving average every day since, I guess, about October 11th. If we go back to the SPY for a moment, I wanted to point a couple other things out that we've been looking at, which were the Fibonacci levels that we were talking about from the lows of last month. We never pulled back even a third of that move. That is, we never gave back more than the 38.2%. We never even attained that, is what I meant to say. And the volume weighted average price, we can see with this trend tool here, we can switch it down to a volume weighted average price. And since that low was made right here, we've been closing at or above for the most part in the SPY, right at 56.50. So the Qs, I'm sorry for the Qs. Why was I just saying the SPY? Um, Anyways, 56 continues to be important, but the point was that we continue to hold right on that volume weighted average price for the event. Let's go back to the SPY for a moment. Let me point that out here. The volume weighted average price in the SPY we have held up above on a closing basis as well. You can see how it moves along there, and we've tested it a couple times and it continues to hold above that. So that will be another important level to continue to watch. And if we put those Fibonacci lines on here, we can see that we did attain just about that 38.2% retracement of this move. This would be right down to here, and that's where we found that trend line in the 20-day moving average last week. So those did turn out to be a critical area for the SPY. And sorry for keep jumping back and forth between the SPY and the Qs. But anyways, back to the Nasdaq for a moment. We can see though, again, it's been choppy. This 56 level is is going to continue to be important, and there's further significance added to it because it is the location of that rising 50-day moving average. Are we building for a year-end break and decade highs? It's a pretty plausible scenario here, and again, we're closing above those all those key moving averages. So you have to be impressed with the resilience of this market. The Russell 2000 was up 2.6%, and similar action here in that we're seeing this prior level of resistance, which had become support, continue to hold as support. So a key level for the Russell 2000 is at about 7130 or so. This is another level of prior resistance that we've been kind of battling with. So we spent a lot of time back and forth between the 10 and 20-day moving average and these two prior levels of resistance. But overall, you have to be looking at this as, I think, constructive action, because we continue to see that, although the trend line was briefly violated there, we didn't break down through key support at that 7115-ish area. If we were to break below and hold below there, then we would have more reason for concern. But right now, it's constructive. It's neutral to constructive, and I think we want to, if we're saying neutral to negative or neutral to positive, we give it that little bit of extra positiveness because of the breadth and the higher lows and these rising moving averages. I hope that made sense. The semiconductors have bounced from key support as well. This prior resistance at the $30.50 level has been tested numerous times. We did close below the 20-day moving average, but the 20-day moving average was advancing, and more importantly, we didn't break down through that support. We came down and tested that critical level near about that 30.50 area, but we didn't close below it, and that's what's more important to recognize. If we took a look at a similar type of trend line, we could draw something like this, and again, to say that was broken, but we're holding above the let's take a look at the volume weighted average price since those lows. We've held above that for a while. That's near about 30 and a quarter. So 30 and a half, I think, is the bigger important level in here. We're battling with this 150-day moving average in the semiconductors. We're battling with this prior level of support. So it's not supposed to be easy to get past these key levels, but there is still some really good action in some of the individual names, and that's where the focus should really be right now. And it does continue to be easier to make money on the long side versus the short side, and that's kind of been the theme for the last couple of weeks. Is if you take a look at the individual action and you see what appear to be setups that could turn bearish, a lot of those are turning back around and squeezing the shorts, and that's certainly been the case for the market overall, and it is obviously in a lot of the individual names, and there's some good bullish action in the individual names. The financials have been in this downtrend for most of the year, obviously, and a key area up for this group will be at about 14 and a half. But just look at the chunks of movement here. We had this big breakdown, obviously, and all this action down here, and this prior resistance is really doing a great job of holding his support. It doesn't mean it will continue to hold his support, but right now this prior resistance does hold his support, and this is a key level for this market near about $12.80. So back below $12.80, then obviously you have the 50-day moving average right there, but if we break down and hold below for more than a half hour or so, $12.80, then you're going to have issues. Other than that, we're looking more neutral to semi bullish. I hate to say it about the financials because I know there's some people that just really cannot stand this group, but only price pays, and we have to leave our opinion at the door. Otherwise, we could get run over. I hope everyone has a good weekend, and I'll talk to you next week. Thanks for tuning in.